Earnings fine print. But let's get to the three major banks which reported their Q2 earnings: HDFC Bank, Axis Bank and Kotak Mahindra Bank. Now, HDFC Bank stands out compared to its peers in terms of asset quality. Abhishek now joins in with a quick analysis.
Growth and quality in terms of asset both has stood out for HDFC Bank when you compare two peers like Kotak Mahindra Bank as well as Axis Bank. So it's a clear review that you can see the stress in the system is building up for others when the going is good for HDFC Bank. So they took the pain of not growing the unsecured book in the last few quarters, that is from Q3 Q3 FY24 to Q1 FY25, and now they are in Q2 FY25 they saw the growth returning for them in the unsecured portfolio. And others, while they grew between Q3 to Q1, they are now facing the music with respect to stress that is being built up in their balance sheet. So take a look at Q2 FY25 results. HDFC Bank saw the best growth rate on a YY basis with respect to ex-Treasury operating profit growth. Ex-Treasury operating profit growth was more than 12% or nearly 13% YY for them, while compared to Axis Bank and Kotak Bank seeing it between 9.5% to 10%. Net interest margin decline was seen across lenders, but the net interest margin decline for HDFC Bank is the lowest when you compare to peers. Like, it declined only 1 basis point for them, while actually it declined 6 basis point for Axis Bank, and Kotak Mahindra Bank saw 11 basis point decline on its net interest margin. HDFC Bank had slowed down, between Q3 to Q1 with respect to unsecured portfolio growth in terms of credit card as well as personal loan. So part of Q1 FY25 performance that you are seeing on your screen for Kotak Mahindra Bank was also due to the impact that they had received restriction on growing the credit card and other products with respect to the unsecured segment from RBI. So now if you take a look in Q2 FY25, HDFC Bank has grown the unsecured portfolio higher than others on a sequential basis. The unsecured portfolio for HDFC Bank has grown at 3.5% when compared to 2.6% quarter-on-quarter growth for Axis Bank and about 1% for Kotak Mahindra Bank. Axis Bank and Kotak Bank saw most of the slippages in Q2 FY25 coming from these unsecured segments. Like, for instance, Kotak Mahindra Bank said in their con call that 30 to 40% of their slippages have come in from unsecured products. So slippage ratio of HDFC Bank continues to be the lowest amongst peers at around 1.25% for Q2 FY25 when compared to 1.8% for Axis Bank and about 1.9% for Kotak Mahindra Bank. So despite the lower loan growth that they had sequentially of about 1.5% compared to peers who had better growth rate than HDFC Bank, the asset quality of HDFC Bank didn't deteriorate much and it remained largely stable. If you take a look, about 3 basis point increase in the gross NP ratio despite lower loan growth. Back to you.
Absolutely, Abhishek, and that explains why for the longest time HDFC Bank has been commanding